Are you a beginner who has a 9 to 5 job and is really interested getting started investing in the stock market? Then this video is for you. In this video, I'm going to talk about every single thing that you really need to know about the stock market, but at the same time, you could work your 9 to 5 job. So without further delaying this video, let's get directly into the things that you really need to know to get started investing in the stock market. The first thing, before you even open up a brokerage account, which we're going to talk about which brokerage account you need to open up, but before even doing that, what you really need to do, you need to educate yourself about what is a stock. What is a stock? Seriously, what is it? A stock is basically an ownership in a company. You're technically an owner, right? But if you go into an Apple store and say that, oh, you're an owner, people are gonna think crazy who the heck you are. They don't know that you're a smart investor who is making money on the side, but at the same time having a 9 to 5 job that they really love. So you might be asking, how do you educate yourself? There are lots of resources online. You don't need to go and pay for a course. Sure, a course might help. There are lots of courses out there willing to educate you. But what I would do personally is I would go on YouTube, search for all of these videos, right? That's what I'm also doing. I'm trying to make educational content for everyone on YouTube so that they could learn more about the stock market and start investing for their future. And then there are newsletters, articles, and every single thing that you could find on Google, right? Google is your source. Google has everything. You don't need to go to a college to even get a degree. So please utilize Google in understanding more about the stock market and also other resources like YouTube, as I mentioned. So now that you're educated, what's the next thing you need to do? You need to open up a brokerage account. This is really important. People say that you should open up a paper trading account before that. Paper trading is a really good option if you don't want to lose a single dime. But here's the thing. If you start paper trading, if you make money or if you lose money, losing money with paper trading is good because you're not losing anything personally, but the lessons you'll learn, they're really important. They're going to make your foundation really strong. When you try to trade with real money, you're not going to fail. But here's the downside of paper trading. There's no emotion. You'll just wake up, you'll just buy a stock, and you'll just sell a stock. What did you get out of it? So there's no emotional connection between your money and the stock market, right? So that's the difference between paper trading and trading with a real brokerage account. So what I would recommend is, sure, you could go open up a paper trading account. If you're really interested in opening a paper trading account, the one that I would recommend is the Thinkorswim paper trading account, which is provided by TD Ameritrade. But if you really want to open up a funded brokerage account, what you need to do is decide which brokerage account that you're willing to open, right? So if you're a beginner, the number one brokerage account I recommend is Robinhood or Webull. Robinhood is the most simplistic application you'll find for a stock trading account. It shows you how you could easily buy a stock, sell a stock. It's a really simple application and it's easy to navigate. Those are the two most important things you need to know: how to buy a stock and sell a stock. The rest you could learn on the way. How you can short the stock, how to trade options, how to sell options. There are lots of things that you need to learn about. But before getting into any of that, just know how to buy a stock and sell a stock, and the rest would come later. So the second account is Webull. Let's say Webull is the father of Robinhood. It has more data, it has more analytics, it has a place where you can communicate with other people, which people just try to say that, oh, it's gonna go up or go down, but yeah, you should never listen to them. And there's just more tools at your fingertips, right? You could draw charts and you could draw a lot of more things with Webull. So those two are the accounts that I would always recommend, Robinhood or Webull, for beginner traders. So if you're interested in any of those two platforms, I'll put the link down in the description below so that you could sign up for any of these accounts. You'll probably get free stocks and I'll probably get free stocks. I'm not sure how many, but 12 or something. Now that you have opened up a Robinhood or a Webull account, let's talk about goals. What are your goals? You need to write your goals down strictly on a piece of paper so that you understand, right? You might be thinking, oh, I have them in my mind. No. Just go take out a piece of paper and write down your goals. What are your goals? Your goals are to be successful in the market. Your goals are to be a long-term investment. Your goals are to be a short-term investor. Your goals, what are your goals? You need to figure that out for yourself. But what I would recommend, I'm thinking that you have a 9 to 5 job, but you also want to make an income on the side. So what I would recommend is looking at the stock market in general and looking at the different stocks in the companies that you really like. Let's say Tesla, Amazon, Apple. These are the good tech companies that a lot of people invest in. And you see the chart, right? You say that, oh, the stock is at what, $110? Tesla's at $110. That's cheap. You don't need to be smart. You don't need to look at the news. You just need to look at the chart and see that, oh, this is at a low point, and I know that this company is not gonna get bankrupt. If you know that much, then you could make a lot of money in the stock market. So let's say you have $1,000 invested in Robinhood or Webull, and you decide to buy a company like Apple, Tesla, or anything, and you buy it at a low point that you know that right now the market is really low, the stock is really low, just by looking at the chart. And once you buy that stock, and let's say you open your chart up after 1 week, 2 week, 3 week, or even if you open it up daily, right? The next day you see that, oh, you're making 10%, oh, you're making 3%, you're making 4%, any of those percentage. This is how you can make quick short-term money, but at the same time know that your money is not going to waste because these are invested in good companies. So now what you really need to do is to diversify your investments. Don't put the $1,000 you have, the $100 you have, even the $50 into one basket. The earlier you learn how to diversify, the longer you're going to be successful in the stock market. Sure, you could get lucky here and there. Oh, make $1,000. Oh, you could make some amount of money. But in the long term, diversification will save your money. And you might be wondering, oh, I don't want to do all this research. I don't want to do all this. There are good ETFs like the S&P 500, VOO, which is the Vanguard S&P 500 basically. And that has lower fees and all that. Basically, investing in that single stock is going to be really beneficial if you don't want to waste your time and energy trying to find that perfect stock. Those stocks don't fluctuate a lot. Those stocks won't make you rich overnight. This is really important for you to understand right now, is that investing in the market is not about putting your money in today, making that $1 million, and just getting out tomorrow and enjoying your life. There's no shortcuts in life. The more you try to avoid taking shortcuts, the better off you'll be, because shortcuts in life will push you down the wrong path. Now that you know about diversification, you have to find a couple of good stocks and get started investing. Sure, you're going to lose money. Sure, you're going to make money. But here's the thing. You're not going to buy with all of your buying power. You're not going to buy with thousands of dollars that you have. You're only going to use a portion of that buying power to buy a stock, which will reduce your risk. Now that you have started investing, what you need to do is you need to monitor your account. Let's say you have free time during the day, during lunch, after work, anytime. Just look at your portfolio, see how everything's working out. If you're up, let's say even a couple percent, and if you feel like, oh, let me just take that money, you could go and sell that stock and be happy about it, right? Think of it like a successful win. Here's the most important thing I'm going to tell you. Stock market is not a thing that you're going to put money in today and tomorrow you're going to be a millionaire. That's not going to happen. Sure, you might put hundreds of thousands of dollars in options and maybe you might be a millionaire, but those are really rare cases. You have to keep in mind that stock market is a long-term game. Think of it as the more time in the market, the better off you'll be. Look at the S&P 500 chart. 1 day chart, 1 week chart, 1 month chart, 5-year chart, 10-year chart, all-time chart. What do you see? Yes, what do you see? You see that this stock is going up in the long term. Sure, there might be bumps up and down the journey, right? But long term, you know that the market is always going up. And that's how you make money in the stock market. But this video was not about making money in the stock market. This video was about you getting started investing in the market. So the more time you have invested in the market, the better off you'll be. Thank you guys for watching this video. I hope you really enjoyed it. Hope you learned something. And if you really liked this video, please give it a like, a comment, and subscribe so that it motivates me to make these awesome quality videos for you guys. Thank you guys and have a good day. Bye bye.